All right, welcome everyone. So before we get started, I just want to spend a few minutes reviewing core strategy with a trade that we took today. It actually wasn't in the Forex markets, but it's one strategy, all markets. So let's take a look at it, and then we'll go over and find some trading opportunities in the Forex markets. I think we'll start with the euro because there's some levels coming up there. So if you take a look at the NASDAQ, well, first of all, let me share this with you. So for those that are not Online Trading Academy members, you're not part of the XLT or Mastermind community, you're looking at, can you see the grid now with all the supply and demand levels? You should be able to see that okay. I put this grid together for our students and traders most of the time. I've got someone else that helps me with it once in a while. You can see that all right? And if you look here for the NASDAQ, take a look at the NASDAQ level, 2838 to 2832. You can see where I'm pointing to here. So these are supply and demand levels for some of the major markets around the world. There's more currencies coming on this, but anyway, 2838 to 2832 in the NASDAQ. That was grid. This grid was put out very, very early this morning. And then if you go to, I want to make sure you get this. Here we go. We go to the NASDAQ. Okay. So you can see the low of the day today in the NASDAQ is right into our level. So you're probably thinking, well, where does that level come from? Because that's what really matters. All right, we had a nice big move off this area. If I go down to a 2-minute chart here, there's two main things I want to point out here. So let me go down to a very small time frame, and I'm going to scroll back, and hopefully you can see everything I'm doing. Okay, and I'm going to capture the picture again, just in case you can't. So there is the area that we came into. See that level I'm pointing to there? It's this one right here. Okay. Now, we love the drop-based rally. This happens to be rally-based rally, which is okay when it's well placed on the supply and demand curve. So that's why I put it on the grid, the 2832 to 38. Price dipped right into this area and rallied, well, quite a ways now, well over 10 points. But I want to point something else out. This is not just about finding levels, levels. You have to understand how other traders think, what other traders are going to do. I mean, this is competition at its finest. So if you take a look at the chart, notice we had this pivot low earlier this morning, and in the middle of the night, at least U.S. time, we had a low here. So this would be called the Globex low or the overnight low, what have you. And a lot of people, what most people are going to do, because what everybody's trained to do, is when price comes back to that area, buy, right? Buy right here. But what are people instructed to do when prices go below that Globex low or that prior day's low? What are people going to do when prices go below that low? Saying retail traders. They're going to sell. And the group that is going to buy at these pivot lows, where are they going to put their sell stop? The group that buys at this pivot low, where are they going to put their sell stop? Okay. They're going to put it just below the low. Okay. Which happens, both cases happens to be this 2838 demand. So when the retail trader is buying at the pivot low here, right around 2840, and putting their sell stop just below, okay, and also people that are going to short a breakout of Globex low start selling down here, now you've caught both groups on the sell side. I'm saying retail traders. Remember, retail traders tend to lose money. Institutions and banks try to make money. Tend to make money, I'm saying. Okay, my job is to train you to stop thinking and trading like a retail trader and start thinking and trading like an institution. So when price dips into the 28.38, which I was able to plan for well before this even happened, okay, when price dips into this, comes down to this area, I've now caught both groups on the wrong side of the market. The buyers, the retail buyers, and the retail sellers. Remember, the retail buyers are going to buy here and put their sell stop down here. And the people that are going to sell the breakout are going to sell at the same price. So both the retail buyers and sellers are going to be selling down here. Now, when that retail trader is stopping out for a loss down here, when their sell stops are being activated, who's the buyer? Who's filling those sell stops? Who's the buyer on the other side of that trade? Institutions and banks, right? This is the same thing in the NASDAQ or the Euro or the Pound or the Aussie. It's the same thing, okay? Right, and that's why you see this ferocious move in the opposite direction. Make sense? Okay. We'll move on here. Just wanted to kind of point that out to you. So I took a quick little day trade here in the DAX. I cut a picture of the trading account just because if I showed you the whole thing, the account numbers on there, and this is being recorded. Anyway, I was able to make a quick almost $900, $900 on this in a very short period of time, not staying in the trade very long at all. Okay. All right, let's move back here. And again, nothing too complicated. Just again, taking you out of the retail mindset, putting you into the institution and bank mindset. Okay. Yes, MRC is asking a great question. You absolutely have to know who is buying and selling in the market and where they're buying and selling. When you push the buy button, you need to know who the seller is that's on the other side of your trade. And we've gone over this many times. If you're new to these sessions, just go back and watch the recording. But yeah, I want to know that if I'm buying, we'll go to the Euro now, that there's a novice retail seller on the other side of my trade. Okay, and we know that by looking at the actions of the traders. Only a novice retail trader would sell after that decline in price and into a price level where the supply-demand strategy already determined that banks and institutions were buying, right? The reason why I put that level out there on the supply and demand grid early this morning was because according to the strategy and the odds enhancers, that's where banks and institutions had lots of unfilled buy orders, which is where we want to buy. If they're going to buy there, we want to buy there. But when we buy there, I also want to know that there's a retail trader on the other side of my trade selling. I want to know that the seller's a retail trader. I want to make sure the seller is not Goldman Sachs or, a big bank. All right, I'm moving over to the Euro now. Okay, and Elon, I see your question there, but technical term for that, you say, but technical term for what? I missed the question a minute ago. Okay. All right, let's move over to the Euro. And you should be able to see the Euro here in just a second. Good to see everybody again, by the way. It feels like it's been a little while. So you should be looking at the Euro, but before we dive into the Euro, let's quickly just take a look at the dollar. I'm sure most people recognize what's going on here with the dollar. Yeah, Soros, the Euro did hit that weekly supply. Real quick with the dollar. So we have our two supply levels above now on the daily chart. Make sure you have those on your chart. These are key significant levels. And we just hit this drop base rally pivot low demand. Price is turning nicely off that level. Okay. This, and if you notice, the dollar hit this demand level at the exact same time that the spiders, the S&P, the ETF for the S&P, the spiders, hit weekly supply. Okay. In case you trade any of the global equity index markets. Yeah, MRC, a consistently profitable banker institution would never sell after a decline in price and into a demand level. Okay. All right, so that's the dollar. If you take a look at the chart on the bottom, kind of in the middle, we're looking at the weekly chart of the euro. I could draw lines around this, but it's pretty obvious. We've come into this weekly supply. I see a lot of you already obviously knew that. Okay. So now what do we do from here? Well, if we determine by looking at smaller time frames that there's room for price to decline, then we'll go to some smaller time frames and find some supply levels to sell short against. Okay. All right. Well, Soros, that drop-based rally, there was a very strong move out of that area with a huge profit margin. So we would consider that a new level. Okay. Give me just 1 second. Okay. But yes, Soros, we would not take that level again when prices kind of come down to that demand level. I would not expect that level to hold. In fact, I would expect prices to go right through it. Okay. I would consider it completely used up now. So euro into weekly supply, and we've already had a pretty significant decline from that level. In other words, if you take a look at any of these charts, say this 30-minute chart up here, I mean, there's 100 pips right there. There's another, there's quite a few there, another 60 right here, right? So what I want to do now is go to smaller time frames and see if there's a supply level here to short against. Okay, so we can do that on the 30. I think it's going to be a lot easier to do on something a little bit smaller. So I'm going to blow up this chart right here. And that supply-demand grid that I do, whatever we find here, if the level we find here now does not meet entry today, that level will be on the supply and demand grid for tomorrow. Okay. All right, let's see. Soros is saying 130.48 seems like good supply. 130.48. That's a very good eye there. Yeah, that's the level that's one of the two levels I would look at. So we've got our rally-based drop supply, which is great. But let's draw this one in first. I agree with you, Soros. And there's really two levels to focus on here. Other people picking 130.20. Yeah, that's the other level I was going to look at, and then we'll just compare the two. And I'm going to speak to these through and using the odds enhancers. Okay. Now, why not this level right here? I'm going to circle this level. Someone tell me why not this level right here? I mean, after all, it's the exact same picture as the two above. Right, as Jur is pointing out, not fresh, and everyone else, excellent, yeah, not fresh, not fresh, not fresh. Exactly. The reason why this is not a level is because of that pullback right here. Okay. Notice this rally in price into this level. Okay. Now, could prices turn again in this area? They could, but the odds are just not that, supply is consumed. That's a great way of putting it. Orders being absorbed, absolutely. Right. Remember, there's a certain amount of unfilled sell orders here. With each successive rally back into this level, some of those sell orders are being absorbed, right, filled. Therefore, the amount of supply is decreasing. But this level above, price has not been back there yet, which makes it a fresh level. Same with the level a little higher than that. The difference between, just to take your level of education to another level, what's the difference? Well, how much time did price spend at those levels? Okay, this is a key odds enhancer. Obviously, price spent less time at the top level, more time at the bottom one. To people that are new to this, your eye and your brain are going to think, well, this bottom level's got to be better because there's more activity there. It's actually the opposite. Okay, meaning, the less time price spends at a level up here, the more out of balance supply and demand is. The greater the supply and demand imbalance, right, the higher the probability of the turn in price, the stronger the level, whatever you want to call it. Okay. How they left the level is important. But both of these, I'd kind of say they're about equal. There's a nice strong move away from those levels. But because this top one had less trading activity, I'd be more excited about that level. That's all. Okay. What you'll find too is the levels that are kind of big and obvious. And you can answer this as well. You can feel free to comment. Would you agree that the levels that are kind of big and obvious on the smaller time frames tend to not be your best levels, whereas the kind of the smaller levels that a lot of people don't see turn out to be your big winners? And I'm talking mainly smaller time frames. And if you say yeah to that, obviously I agree with you. And that's because, if everybody pushes the sell button at the same level, the trade's probably not going to work out because we're going to create the other side of our trade, right? Remember, when you sell short at these levels, you're forcing a bank or dealer desk to buy. Now that's going to mess up their order flow, and now prices are going to have to go a little bit higher. Make sense? Okay. So watch these two levels here. And again, I'd be a little more excited about the top one than the bottom one, but they're both, they're both okay. All right. Any no questions on that? All right. And just so you know, I probably wouldn't. You're not going to see me take the bottom one. Doesn't mean it can't work. I don't want to completely talk you out of it, but I would take more of the top one. And then, of course, again, these rally-based drops, the first pullback to the rally-based drop, that is absolutely key. Okay? That is absolutely key. All right, let's move on. Let's see here. Someone just posted an article. I don't know who that was, but all right. Oh, Markov. All right. Yeah, that definitely helps. Mistake? Okay. Well, that's all right. So what Marco just posted, I think that was an article, a recent article I just put out there, right? So maybe that'll help you. Okay. FT, good question there. I don't think that matters that much. I mean, that's obviously up for debate. I know other people are going to have different opinions. I've been doing this for so long, I pretty much ignore that. Okay, it's not that big of a deal. All right, I wouldn't worry about that too much. If you just focus on the odds enhancers and you took time off the bottom of the charts, I think you would do fine. All right, so for the euro, we haven't spent time looking for demand simply because it's significant key demand. I think is quite a bit lower. All right. For example, if you look at this 240-minute chart down here at the bottom, we're turning right here at this area, but do you see this wick down here? Does everybody see this wick down at the bottom here? The fact that price was able to go down to here in this candle, down to here in this candle, means that significant demand is not till lower. So I wouldn't be excited about buying, anywhere near current price. Of course, if something should, developed on a smaller time frame, sure. But that's just not the case yet, okay? I would be betting on the short side in the euro for a short-term trade in the near future, that's all. After coming off this larger time frame supply. Even if there was a key demand level close, we don't want to be buying too close to this 132 supply. All right, let's move on to another market. And I didn't want to come into this session. I always come into these sessions with this very kind of strict list of, an agenda, and I've got all these markets planned out. And I thought we'd kind of, do more. It doesn't matter what I want. Let's hear what you want. Give me another market, and we'll go right there. Of course, let's try to keep it to the Forex markets. I'm good with whatever you want. So dollar Swiss. Okay, we'll go to the dollar Swiss. And then we'll look at the pound, and then we'll go to Aussie. All right. All right, so let's look at the Swiss here. Okay, give me just a second. And I'll capture the chart. Yes, Luca, great question there on the gaps. I could answer that here. I can give you kind of the short answer, but what I would suggest you do, I have 3 or 4 articles just on gaps. If you go back and search those are in Lessons from the Pros on the Online Trading Academy website. I think those will really help you. They explain in detail the novice gap, the pro gap, how those are treated. All the trades you'll see in those articles are real trades. Either I took or the students took. And after I just said all that, you're saying you read them. All right? Obviously, I didn't do a good enough job. Otherwise, you wouldn't have any more questions. So let me read your question. The gap is strongest possible in balanced supply demand. How can we know to fade the gap? Is there any info on the chart that tells us? Yeah, well, it depends on where it is in. It depends on where it is on the curve. Most gaps are going to be filled, very shortly after they're created, usually that same day. But I think if I can help you any further, I would really focus on the novice gap and pro gap, and really only focus on those. And then especially identify a novice gap into a pro gap on the upside, a novice gap into a pro gap on the downside, and that's the only thing I would have on gaps in my trading plan. Those are my 2 cents. So let's go to dollar Swiss. Obviously, weekly, we came close to this big level down here. Now we're rallying. On the daily, we see we've got some supply a bit higher. Let's come down to an intraday time frame. Okay, so notice this chart right here. We took out this little high over here and went just a little bit deeper into this level of supply. Anything above this pivot high is going to be fresh sell orders. We hit that, get another obvious bull trap, just like the bear trap I showed you in the NASDAQ this morning. We're peeling off that, so now what do we do? Well, I would say this supply over here to the left that we're seeing on the 30-minute chart is now pretty much gone. There's probably nothing left there. So the 2 areas that we'd want to look deeper into on a smaller time frame is that and that. I'm automatically going to go to these 2 areas on a smaller time frame and look for some institution/bank buy and sell orders in those 2 circled areas on a smaller time frame. Okay, so let's do that. Let's take this chart right down to like a 10-minute chart. I'll expand it and scrunch it. That's too much. You won't be able to see that. Give me just a moment here. Hopefully the chart's not getting too big. So now I've went down and I've identified on the larger time frame where I should be looking. Now I've gone down and taken an X-ray snapshot at the smaller time frame, and now I'm looking. Did that help me? Did circling those areas on the larger time frame and going down to a smaller time frame, did that help me? Did any supply or demand show up in doing that, or was that kind of a waste of time? All right, yeah, it helped, right? Some fresh levels showed up. First of all, this level up here that looked fresh on a larger time frame is not. However, this little area down here, it's not drop-based rally, but I would say it's okay, especially since we just came off that weekly kind of demand area there. Now, it may look like price is far away from this level, but it's not. Okay, let me just grab the chart again for you. Okay, so we've got a nice area of demand there if we get a decline in price. Now on the supply side, I don't see anything up here, but I can take this down to a 5-minute chart and see if anything, there might be something right in here That's why I'm going to do this. I'll scroll back. Yeah, not much. I would take that, but I mean, you've got such a big pivot high there. You know what? I wouldn't take that. I'm kind of forcing something that's not great. Probably going to cause price to stall out, but this is the opportunity. Yeah, Luca, I agree with you 100%. This is the better level. Okay, so that's I would say based on our analysis, larger time frame, smaller time frame. This is the buying opportunity, which is a little bit lower than current price, about 40 pips lower. Not a big deal. We could be there in minutes. You know how these markets work, move. And that's what I would do in the Swiss. Okay. And I think we're going to go to the pound next. Let's do that. Oliver's making a good point there. Let's talk about that for a second. Says, the advantage of trading futures, right? Yeah, there's advantages to trading futures in a smaller time frame. He says he's afraid on the spot, and in these smaller time frames, he's simply going to get stopped out due to the spread. 2 years ago, I would say, yeah, don't do it. And if you remember 2 years ago in FX Street, that is what I was saying. Boy, watch this level up here, by the way, in the pound. See this little 5-minute level? It's also on the 10 here. Watch that. But these days, Oliver, it's getting better and better. I know, for example, FXCM has done a great job. I'm hearing a lot of good feedback on FXCM, and they're not the only ones. I'm sure others are today's spot is definitely getting better. So futures are great. The other advantage of the futures is you get access to all these other markets that you see on the right side of my screen. I know a little about Dukas copy, not enough to comment, but I know I'm hearing everybody rave about FXCM's new kind of new platform, and they're pretty happy with the spreads and all. So, all right, take a look at the pound. Obviously, weekly we just hit this pivot high, starting to roll over. All right, so what we want to do is find is there more room for prices to decline in the larger time frames? The answer is yes. Let's check the smaller time frames. And if the answer is yes there, we've got a nice little supply level sitting just above current price. Aha. Take a look. So we've got a small little level here. I don't know that I would buy against this level. I'm not saying let's use this for an entry on the long side. I wouldn't be surprised at all if you got a bounce from there. What I'm more interested in is let's take this chart and put it right next to it. I'll try to make these time frames a little bit closer. Then I'll grab the charts again for you. So I'll take the picture. Yeah, I agree, Luke. I think ultimately you're probably going a little higher, but well, that's not going to cut it. Let's come down a little bit more. And this trade could meet entry, momentarily. So let's see. What I'm looking at is the little thing on the 5 there, and I'm suggesting that's probably the level right there. Now it looks pretty wide, but I'm only looking at a 10-minute chart, so don't let that fool you. And let's snap the picture again. So we would, based on larger time frame area, again, it's not fresh. We've been here a number of times, but potentially looking for a move from this 161.97 area down to the 161 low 50s in here. So potentially be looking for a move from here down to here. Make sense? Okay. I'm just showing you on two charts so we don't have to kind of scrunch and mix time frames too much. So again, that's 161.97 with a stop just above the upper line there. Probably 162.06. I don't have too many multiple targets. I see the question up there. I want to make sure that the chart is offering 3 to 1. For short-term trades, sometimes I'll take them 1.5 to 2 to 1, the profits. But I want to make sure the chart is definitely offering at least 3 to 1. And then a target with that, since the demand here is 161.53, I would make your target 161.58. You want to get out before the level. And put a blue line here at 161.58. Remember, if you're short, you're going to buy back your position. Okay, if you're a target, and if you're buying, you don't want to buy where there's competition to buy. And at the demand level, there's going to be competition to buy. So there's the blue line there. Okay. Again, the only caveat here is it's not a completely fresh area, but we'll keep an eye on this one. Just putting some lines in here. Okay, let me take the picture again. All right, so you've got a potential entry off one time frame, and a stop is the red line, and then a potential target down here with the blue line before you get to demand. So just a little short-term trade. And again, if you're trading spot Forex, I guess you got to be a little careful with that. You can always take that in the futures as well. But the spot Forex brokers, like I said, have been getting better and better. All right, let's go take a look at the Aussie Dollar. And since we've been looking at spot markets all day, maybe we'll look at this one through the futures. I'll pull up a futures chart of the Aussie. Sorry about that. Didn't realize the microphone was off. Yeah, Will, I see your question there. What time do you start trading in the morning? I have a pretty rigid schedule when I'm home in Chicago. I try to get up about 5 Central Time. And between getting all the supply demand levels done and XLTs and everything set up for OTA and trading for myself, getting all that setup done, I try to get that done in an hour, by 6:30. Then I go to the gym for a quick workout, and I'm usually trying to be back by 8. And that's it. For me, it's all about the prep work. It's not about sitting here and pushing buttons and looking for the next trade and manually doing this and that. It's all about the prep work. In other words, plan. Okay, let's take a look at Aussie. So again, if we look at the larger time frame, not that, a little similarity to the pound in that we've come into this prior pivot high where prices have started to peel off. And by the way, if you're in the mastermind community with us or an XLT or really get core strategy, my guess is that the Aussie dollar over the past 2-3 weeks has been your best performing, is where some of your big profits have come from as a Forex trader. I mean, there's been some big moves in the Aussie, and they've all been off just key, obvious supply and demand levels. I don't know if you've noticed that, but yeah, the Aussie's been fantastic. I was Aussie CAD, Chuck, you're saying even bigger. Has anybody noticed that in the Aussie the past couple weeks? Just hitting perfect levels and turning in big moves. I was in, it's funny, I was in Las Vegas for a Forex and options expo last weekend, just for a couple days, and doing a little piece there. And someone I was with was playing a slot machine, and the thing was just, every other spin, it was just paying and paying and paying and winning and winning and winning. And I'm like, man, this is like the Aussie dollar. Anyway. Okay, let's take a look. So that's what we have, larger time frame there. And here is, it reminded me of the Aussie. Here's a smaller time frame. So again, given where we're at, bigger picture, I'm inclined to, there's going to be two great levels on this, whether you're looking at a 30, 60, 45, it's not like one time frame is better than the other. We're simply doing exactly what a doctor does. We're taking X-ray snapshots with one goal in mind. The goal is to find the orders. Where are banks and institutions buying and selling? That's why we do this. So we've got two levels on top of each other here. We've got some nice rally-based drops here, but before that, we've got an area here and an area sitting, an even better area sitting just above this. In fact, I'm gonna get rid of that one. This is not completely a fresh level, but price just barely touched this area and fell away from this level. And it is the top level on that levels on top of levels odds enhancer. $102.50, Luca, you're saying is demand. Yeah, there's a couple demand levels here. I'm going to go with your drop base rally demand level there, and of course this one right here, assuming it hasn't been touched yet. Let's see. Almost, but it did not touch it, which is good. Trader, no, I would just stick to that kind of 3 to 6 candle concept on any time frame. But I think the other way to ask the question, or let me just answer it in a different way. If you found a great 60-minute level, okay, I wouldn't, that maybe has 3 to 4 candles like you're saying. Let's say it's a demand level. I wouldn't worry about, take that as is. I wouldn't worry about a smaller time frame supply level. In other words, you're not going to not take that 60-minute demand level because there's a little 5-minute supply level sitting just above. Chuck, Globex is people misuse the Globex term all the time. Globex is what Globex really is. It's an electronic trading system from the Chicago Mercantile Exchange. It's really just the NASDAQ is the electronic trading system for trading stocks. The Globex is the same thing for futures through the Chicago Mercantile Exchange. When people say the Globex session, what they're talking about is the overnight session. But the Globex session, when people trade any Globex markets like the NASDAQ or S&P, when they trade them during the day, they're still trading on the Globex session. See what I'm saying? People, kind of misuse the term, but it is what it is, not a big deal. It did already touch the supply zone on GIVO, but barely. See how it kind of just touched this and collapsed? That tells me there's still probably quite a bit of supply up here. Plus, this is located in a really nice spot on the larger time frame supply demand curve. So I'd watch these two areas. This one comes in about 103. Call it 95. I'd probably go up to 95 just to get into the fresh orders right there. Okay, that's that little pivot high. And I'd go a little, so I wouldn't start selling till 103.95 with a stop about 104.05. So about 10 ticks, 10 pips. Okay. Yeah, the Aussie futures are going to pay $10 a tick. So you're going to make or lose $10 a tick when you buy or sell them. And then this demand level below, this is going to be set up for a nice bear trap. Okay. All right. Let's see. Capima, yeah. No, I wouldn't call myself a master in trading, but I've been doing this forever. This is kind of all I've ever done since I was in my early 20s. So I'm not like baseball players in the United States, for example. I don't know where you're at in the world, but baseball, Major League Baseball. When someone hits a home run, yeah, I think it's great, but I'm not that. I mean, that's all these guys do. They should be able to hit home runs, right? If I practice swinging home runs every day for most of my life, I should be able to hit a home run. So trading in the markets is something I've done my whole life. So I better know what I'm doing. Otherwise, there's something wrong. Anyway, let's move on and let's look at another market. So I want to look at the dollar Canadian. We can look at that. We'll go back to the spot market. Yeah, futures prices and spot prices are going to be a little bit different. Sometimes more, a lot different. Sometimes a little different. Okay. All right. Dollar Canadian. So let's start with the larger time frame, that weekly. Okay. Someone said they were in a position here, and the only thing is, yeah, we hit. I've been watching the dollar Canadian. There's inside this green bar there is some demand, but what we've also noticed is, hang on a second, some supply has formed on a larger time frame. That is significant. And it's right here. To me, this is a key level and a key event. All right, these big, these significant weekly levels, according to the odds enhancers, they hold up most of the time. Okay. All right. All right. So this comes in about 98.80. So watch for that. If you're long, just make sure you know that this level's above. But this also suggests that this market's probably going lower. You're probably going to hit this and go down and test these pivot lows right down here. Okay. And that kind of coincides with the dollar. I mean, there's room for the dollar to rally, even on the intraday time frames. There is definitely some speed bumps up here. Don't get me wrong, but yeah, we can take a look at the monthly Pip Runner. Pip Runner, I haven't seen you in a while. Yeah, this drop-based rally area, you've kind of been here before. I wouldn't be too excited about this. I'd say that new supply is kind of more important. So just watch that for the Canadian. So I just put my email address in the chat window. I see we're about out of time here. If you have any questions or comments, I can always be reached at sseiden@tradingacademy.com. So again, if you have any questions, comments about what we do here, about the trading rooms and online trading academy, just send me an email. Let me know. Okay. And hopefully that was helpful. Georgie, I see your comment question on quantitative easing. I look at all that stuff as a another form of intervention, and in my experience, I've just never seen intervention do what it was intended to do. Almost always at the opposite. The opposite of what you expect. So I look at all the times the Bank of Japan intervene in the yen. Yeah, they get it to do what they want it to do in the next few hours. But, a day later, it's not only back to where it was, but now it's screaming in the opposite direction. All the bailouts in the United States, a few years ago, in the trading rooms here at Online Trade Academy, we bet against all those. That was a sell signal, and it worked out great. So anyway, not contrarian thinking, just reality-based thinking. Anyway, send me an email if you have any questions. Thanks for your time. Good to see everybody again. Missed you. Haven't seen you in a while. We'll be back soon. Have a great day, everybody.